Friday, September 8th, market analysis, Stan Ehrlich, about 10:21 California time, a little late today, and our head and shoulder top, which has been developing so far so good in the stock market indexes. We're going to continue because it's very important to talk about to a great degree. So last week we had on Friday outside trading ranges to develop a rally high in the S&P 500, as you can see on my chart here, in a resistance area and trying to close an old gap from the beginning of August. The first shoulder is here, June 15th, the middle of June. The top of the market was, in fact, a bearish engulfing ER sell signals. So far, ladies and gentlemen, I got the bottom October 13th of the bear market with a buy signal, with the ER signals, and the high so far, and I think the beginning of a bear move down into October. Period. If that's true, and we start to slip some more, and today we're up a little bit at the moment, 118 or 120-ish on the S&P. The DIA is up 111, almost the exact same amount. And the Qs are up almost the same, 140, just a point and a fraction higher, which is not very much. So we still have a gap to close a little higher in the S&P. I'll zoom in a little. And that was from just the beginning of the week. Now, whether we're going to close that gap or not, to me, is not that important, although gaps are usually closed. I can accept that, even if it takes another couple of days, as long as it doesn't go any significant amount more than the high of the gap. Very important. And turn down right away also. But if it doesn't close the gap and we just keep sinking from this point, that's fine. The head and shoulder top will just simply look more obvious, develop more properly over time, and we'll need to come down to the neckline, which is this big fat dashed red line that slants upwards slightly across the lows of June 26th and August 18th. Now, that neckline goes up a little bit every day, but very little, so it's not that significant. So we're going to go down to approximately 434. And when it gets there, if it jumps down below, gaps down below that neckline and leaves the gap behind, that would be a classic bearish breakout across the neckline on a head and shoulder top. Doesn't happen that often. So what we want really is for the market to slam dunk through that line, stay below the line, close below the line, have relatively high volume, if not flat out really high volume, because it probably will be making new lows for 2 months or so at the time it happens, which I think is going to be honest with you, maybe even next week or the week after, but this month, certainly. And that's without going sideways too much, and certainly not up much, if at all, or very often. Okay, good enough for that. Now, when we break out, we're supposed to get down to a minimum downside objective of approximately 407. That is approximately a 50% retracement of the full bull market from October 13th to July 27th, which again was a bearish engulfing on the high day. And we caught an ER3 trade on top of that. It's worked out so far extremely well. But this is the beginning of this big move. I don't call big moves that often. They don't happen that often. All right, so DIA has the same situation. The neckline slants upwards a little bit more, but not outrageously. And we had a bearish engulfing, but unfortunately, it was not overbought enough to generate a red sell signal on the last shoulder high just a week ago. And we have been making lower lows since. Today, we rallied enough to close the gap at the beginning of the week. And fairly accurately, that's it. That should be it for the DIA. And if that's true, then of course, S&P and the Qs, et cetera, et cetera. But we'll see. Too soon to tell. It's dropped down some. I wouldn't say a lot. I'd love to see this thing make new lows for the day and close below yesterday's close. Well, frankly, the more weakness from this point on, the better. So the last shoulder is in. The timing was almost exactly right before this shoulder formed in the indexes. I would say 2 or 3 days before I started talking about the timing, which was, what is this, Monday of this week, not realizing at the time it was a holiday anyway. So Friday or Tuesday would work. Friday. Next chart is the QQQ. And I should mention, the minimum downside objective on the DIA is 323, which is also around a 50% retracement of the long-term bull move. QQQs. We have the last shoulder in. We have a decline for a couple of days, fairly significant, right down out of that outside down day, which was almost a bearish engulfing ER sell signal because we weren't quite overbought enough to generate the signals I like. So we've missed signals on all 3 points. Overbought, yes, but no bearish engulfing. Did not quite have a bearish engulfing on the first shoulder. Overbought, yes, at a resistance area in a historical resistance area on the Qs on the rally high, previous top of the bull market over a year ago. And so we are very close, were very close to making new historic highs in the Qs. I think that could happen before the end of the year. And in the meantime, I think the Qs are going to go down to approximately 321.50. That's my minimum downside objective. I probably should roll this to the right a few days, and that may lower the downside objective a little bit, but certainly not much to make a big difference. I'll call it 321 now, big deal. We can't go sideways much, we can't go up much, and we need to go down to new lows soon, next few days, ASAP. Next and last, Russell Index. We are now approaching fairly quickly the neckline. The shoulder is in, more obvious than the other indicators, indexes, sorry. Everything looks good about this pattern. On a 1 to 10, it looks like an 8.5 or a 9. How many head and shoulder bottoms do you think I have seen in the 52 years I've been a technician? Probably thousands. Some of them are less than a month. Some of them are even inside 1 day. One of them, I remember, lasted 10 years to evolve. So it's a matter now of starting to slip. Otherwise, I got little problems. Next week, we'll find out. I'm pretty sure it's going to be a defining week. The E-mini has the same formation. We've got the inside shoulders. We've got the head of the formation, a bearish engulfing ER sell signal. Voila. In fact, we have 3 bearish engulfings during the 5 days that it took to develop this top. Immediately prior to the big break, and that was 3 or 4 days after the highest high. So both of them are bearish ER sell signals. I don't remember seeing that often, that's for sure. Now, same commentary comes and goes. I have no change of opinion. Minimum downside of objective on the E-mini is 4,070-ish. And we're going to go to the NASDAQ, which of course has the same formation. There's the shoulder. I didn't draw it in on purpose. Use your eyeballs. Overbought condition. Inside shoulder, about the same price levels, which is really nice. That doesn't happen very often. We have the highest high in an overbought condition. Unfortunately, the 2 bearish engulfings didn't end up being the highest high, but they were part of the topping out formation, which I like, but I can't claim that they were good signals. That was a premature buy signal. We got oversold at about the right level. The neckline slants upwards slightly, and the last shoulder was last week. This is it. Got to start coming down real quick. Next chart is bonds. This ties in with the stock market index formations, but they don't agree at the moment. And as far as my analysis is concerned, if bonds go up like it looks like they're trying to, and they have just finished maybe the last shoulder on a head and shoulder bottom, which looks pretty good, that would cause the bond market, if it works correctly, to go up to at least 127 probably, and maybe even higher, and start a long-term bullish situation. But since I'm looking for the indexes to drop a sizable chunk between now and the middle of October, that would imply at least the stock market indexes, I meant the bond futures contract, the long bond, would go probably sideways, if not making new lows, which implies higher rates, which the market doesn't like usually. So I think this formation may fail. It's a 1 month, fairly small, but legitimate. That's my first guess, but I gotta call it like I see it. So far, it's starting to do something, and maybe I'm wrong in the indexes, stock market indexes. I don't know, but they don't seem to agree at the moment. Next chart. 10-year notes is the same story, and it's starting to come up a little bit today, although the current quote is a little lower net change. So we'll see how the patterns work out. Next is going to be crude oil. Well, we got overbought a few days ago. We haven't made any more progress in the last 3 days after the first time we're getting to the highest high so far. RSI did slip down a little bit because of a lack of momentum in the last few days. And now we'll see if we can end up having a reversal. We do have an outside up day, and it does not have a new high for the trend yet. It may have a new high close, but that is not necessarily in this case the most important thing. I think a new high close above previous highs would be the most important thing, but you can't shake off the overbought conditions. So I'm still looking for a downside correction. Have we seen the highs or not is kind of the question at the moment. The downside correction should come down to this red zone and bounce off of it, and that would be around 82.70-ish on the average. Next chart is going to be heating oil, which is close to being overbought again, but we have had 2 previous overbought conditions, and we still have a divergence with the RSI not making, even today on the 3rd highest high, a new high on the RSI. So that's divergence, and it's cruising for a bruising, if you ask me. I'm looking for a downside correction back to the red zone again, and that would be down to 3.0. Yeah, that'll work. And then maybe it's going to bounce again, but let me get down there first. And I think it's going to happen soon. Next, we've got natural gas bounced off of support, doing an okay job of it. Does have a gap to close at 2.735. And I think that's going to happen soon, next week. Let's get there first. Otherwise, any new low close below yesterday's low is probably not oversold yet, going to bang into new low ground and all the way down to 2.3. Next chart is gold, silver, and platinum. What a story to tell. Okay, we've picked off so many significant major tops and bottoms in precious metals this year. It's embarrassing. We got the bottom of the market back on August 21. We got the top of the market back on July 20th. We got a bottom of the market on February 28th. We got the top of the market on February 2nd. And there are a few other great major turning points late last year. Right now, that bull move has had it. We got up into resistance a week ago. We're slipping down to a little support that is holding. Yeah, day before, yesterday, and today so far, I'm not seeing anything looking real good at the moment. It's just barely higher on the day. If that, yeah, it's up 0.7, big deal. So the trend is down for, since April, May. I'm looking for a test of these lows at 1913 and maybe even lower. Next chart is silver. Same commentary, including, unbelievably, good. Just before the big break, almost the high of the rally. Just before the big rally, almost the low of the break. The high of the rally, the low of the break buy signal, both double top highs in this formation, not just one of them, both of them. And then another bearish engulfing just before it crashed literally the next day. The bottom of the move, and that is all yet this year, March 10th now. And a couple of premature signals. They did make money. They were up for a couple of days, and that was plenty of room, elbow room to make some money, not much. Those are at the major tops and bottoms of major swings are the ones that you love. And I've got tons of them to show you in precious metals this last 9 months to a year or something. Next chart is platinum. I can't believe that platinum gave us a sell signal at the top of the rally and it went straight down every single day, which would be your short at around 973 or 981. Those are the two locations, and made money on the first day, down on the second day sharply. Now we're at 934, then we're down to 914, then we're down to 909 yesterday, and today we're currently trading at 896. I remind you that we're short at 972 just a few days ago. Now we're oversold. Now we're in an area of support, and we're probably going to turn around and go right back up, and it wouldn't surprise me if we went back up into the 980s again. Next chart. Buy signal on the bottom in copper, sell signal on the top in copper. Not a lot of great ones before that were really profound, but the last buy signal worked out extremely well. We're about to make, I think, new lows for the trend, but we're getting close to oversold. So we could very well bounce off of 3.68 first, because I think we're going to get oversold if we get down there right away, next day or two. Yeah, that looks likely. So I'm a little bit more bearish, and then I think we're going to bounce. Next chart is soybeans. Slightly lower lows ever since our upside exhaustion gap and overbought conditions around the previous top. So are we going to doodle our way back down relatively slowly to this blue range, which is the giant support area? Well, it kind of looks like that. That, I guess, is my best comment at the moment. Don't have anything super profound, but this is a very long-term situation still in progress, and I can't decide what super profound long-term thing to say at the moment. I'll just shut up. Next, bean oil. Double top formation, second high is a bearish ER sell signal on the rally high. This is a new low since then. A new low close, probably. It's in its second week, it looks like, or ending its second week, going into a third week, it looks like. We're going to go down to the bottom, I think, of this support area. And once we get into the red zone, we're going to get oversold. So it's going to try and bounce again, and probably will. But if it can't bounce very much and doesn't bounce and starts closing below the red zone, watch out. Then we're going to go down to 50. Next chart, meal. Resistance to stop the rallies again and again in the last couple of months. We do have a bullish engulfing today at the moment. That implies the market's going to rally back up. It wouldn't surprise me if it had enough strength to get back to the red zone again, 415, or maybe a little higher. But if that happens, we'll see what condition the market's it's in at the time. But I like the bullish engulfing just for a little rally. It's not an official buy signal, but it is an integral part of the ER signals. Next chart is corn. We have an outside down day in corn, bearish engulfing, but yeah, okay. I think we're going to see new lows again very soon. We're coming super close to the lowest low in corn in years, multiple years. Now that is support and significant, but it ain't much. And I don't know how quickly and easily it's going to crash through 471. We'll see when we get there. but that's very bearish if we do it. Wheat has made today another new low for its downtrend. Now, I did talk about this coming down, but I think it's going to be slow. Remember, this thing topped out at the beginning of the war at extremely high prices historically, and with an ER sell signal, of course, on the high day. Since then, we've had a few great signals, the big ones, and it is at the lowest low today since a long time before the war even started, multi-year lows. I don't think it's going to go down very fast, but it doesn't show any signs of being bullish at this particular point. Slow, grinding, bear move. Next chart, cattle. Is it trying to double top out? Maybe. What do we have today? And doji inside range with a slightly lower quote. Big deal. Got not too much to say, except it's up against resistance of previous high, and we did get the high day with a bearish ER sell signal, and also on June 7th, and a very, very good buy signal on March 24th. Next chart, hogs. Miss Piggy's going sideways. I'm not sure what to say. The obvious longer-term trend is down. It looks like it's going to come down and test the lows of 78.18 recently, 77.70-ish. And we'll see if that happens. I think it will. And if it breaks that, it's simply going to get more and more bearish. Next. OJ, I can't believe this market. It won't quit. Today looks like a new high closing price for the trend, but it needs to close above the highest high, and that was an overbought condition well over on August 17th, not long ago, less than a month. And we did get a good sell signal that worked for a couple of days, but I'm disappointed it wasn't more profound because it could have been a great double top. Now it doesn't look like that's going to happen unless we immediately go right back down again. It looks like it's going to make new highs and shove up again another notch. Next chart, corn, cocoa. We're looking at a double top so far, and it seemed to be starting to slip yesterday, but a little rally today doesn't really change things much. I'm still going to claim double top in overbought conditions almost at the exact high, same tick. I think there's one tick difference. That is very unusually accurate for a double top. That doesn't mean it's going to work. Our first sell signal was the first high, of course, and we got a huge break the day after the sell signal. I love that one. I was tickled pink when that happened. And we've failed to follow through. I talked about too much too quick. And here we are all the way back up to the highest high. Did not think it was going to go that far up at the time a month earlier. It did. So now we have the good opportunity for a double top. It just needs to start to slip. You know what your risks are. If you sell short here, get the heck out of it if it makes a new high. Maybe you got other reasons to be a little lower for a stop. That would be my best shot. A little over 37.00. So that's your risk factor. Relatively reasonable. The downside is well into the bottom of this sideways range. And if we break below 33.10, then we've got a double top, and you're going to go down a lot more, 29.40-ish. Next chart, coffee breaking down, not holding very well at the bottom of the big support area. I'll just pull this to the right to be a little bit helpful here. And looks like it could have a new low close for the bear market for many, many months. This is going to drop. Next big move down should be 135. Yep. Next chart. Sugar to sweet has almost an ER sell signal. If before the close it can get below yesterday's low, we will be turning red and have a apparently damn good sell signal. Now, 20 is not out of the question. I was talking about for a long time, especially if we have a bearish engulfing today and a red ER sell signal on the close, but not yet. Close. Is it going to end up being a broad double top? Well, the highs are relatively close over a significant number of months. We just need to start slipping a lot. You've got a lot of makings for that to start to happen. I'm gonna have to turn a little bearish here because this is a really good punch into new high ground right after the opening, and then it just gave it away completely. And we're now down a significant amount and almost a new low closing price for the last 4 days. It doesn't have to slip much more. And if it keeps on going, I'll get a big sell signal. The last one, caught in the rag, did have a false breakout. That's called a bull trap. One day overbought above resistance, and all of a sudden just gave it away. One down day, 2 down days, 3 down days, and today is the first up day. And we're damn near at minor support, which is exactly what I think we're going to see next week, 83.50, and probably breaking below that. You guys have a great weekend. I appreciate your time very much. Mañana, next Monday.